Hello fellow option traders, this is Jeff, and this is the second in a series that I'm calling the Option Guru Charts and Analysis, and we'll call this one Part 2, Watchlist and Candidates. First thing I wanted to do is just fix up a couple of these studies and change the colors on them, and then show you what you need to do in order to make sure that you save those. So the first thing is down here on the Stochastic, I would like these little, I don't know, aqua or whatever color these lines are, I would like them to be a little bit bolder because they're going to be key lines, the 80% level here and the 20% level. So I'm going to want to fix that. So if I just put my cursor on top of there and say, I want to edit this Joe Blow Stochastic, and that is called the overbought line, and I want to change that. Let's change it to black, and let's make it a little thicker. We'll change it to a width of 2. I think that's 2 pixels. I'm not sure. And I want to change the oversold, and the oversold of course is the 20% level or 20 level. I'm not sure if it's a percent or not. We'll change that to black and change that to 2 also, and then we'll hit apply, and I guess I can just move this, right? Yeah, so we got it to change here. So we changed that one, and then we might want to make another change. Let's see, any other changes here in colors or anything? The other thing I want to do is I want to get rid of all the drawings so that we don't have anything interfering with what we're going to be doing here. Don't want any distractions. These lines here that are at 55 and 45, we kind of use those. We're going to sort of be using those only when we get desperate, is the way that I like to say it. If we, if something's trending strongly and we're desperate and we want to get in, we wait for it to touch one of these lines, and I'll explain that later. I think that's it. So we want to make sure that we go here and we say, which one is it here? This one. We want to save the study set, and our study set was called Joe Blow. So we save it, and then to bring it up on the other ones, we just say load study set. So we're going to load study set Joe Blow, and we go over to this one and we say load study set Joe Blow. I don't know if for folks, some of the younger people out there may not know the whole Joe Blow thing. I'm not going to explain it, but when you're an old guy like me, it has a meaning as just like John Doe or something like that. All right, we've done that. Now, let me just shrink this down a little bit here. I'm going to cascade these windows here so that I can switch back and forth. I need to cascade this one up here a little bit. All right. Okay, so I have, part of my daily routine is to go through what I call my A+ list. My A+ list has, let's see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. And these bottom ones are all pretty much the same anyway. So I have about 15 in here, and probably a dozen that are the most important to me. These indexes down here don't mean an IWM up here. And even gold doesn't mean that much to me. It's Apple, Amazon, Baidu, CF Industries, Chipotle, CRM, Google, MasterCard, Priceline, Panera Bread. Those are the ones that I currently have on my list. The list is sort of dynamic. A lot depends. I look for stocks that are priced high so I don't have to trade that many options. And this is just for credit spreads. This is the only thing that I'm going to do this for. And so I go through each and every one of these pre-market, either the night after the market closes or in the morning when I get up. I'm a pretty early riser, even though I'm on the East Coast. I'm up 3 to 5 hours before the market opens, at least usually. I should say 4 to 5 hours before the market opens. So I'm an early riser, like I said. And all I do is well, the first thing you got to do is this little red mark here. We're going to say that we want to link this to red. And you know that back here on our Joe Blow grid set here, each one of these are set to red. So whenever I click on Apple here, it's going to be what comes up over here. And when I come back and click on Amazon, I'm going to get Amazon here. So those are linked. All right, so what do I look for? All right, let's go back to Apple, and it's strictly charts that I'm looking at. I'm not looking at any fundamentals at all, just, well, maybe the news. That might be the only sort of fundamental, I guess you might say, that I look at. All right, so my focus is on the daily chart. It's on the daily chart. Apple's a very active aftermarket and pre-market stock. Many of the other ones that I follow, some don't trade at all in the pre-market, but I have the pre-market up here specifically for Apple because Apple's like one of my favorites. I'm in and out of it a lot. Otherwise I wouldn't, the pre-market stuff would be pretty much useless for everything else. Make sure that we're all the way over here on this. Apple's not been doing too good lately. Now the weekly chart over here is important. I use that for long-term trends, and I'm going to squish that down a little bit because it's not important. The daily one is the most important, so I'm going to leave that one a little bit spread out, and I may even zoom out just a bit here to give you an example of what I'm looking for. And I'm going to move a little bit into the past. And I know everybody says, well, hindsight's 20/20, you can do this kind of stuff all day long and show how everything works. Well, I'm sorry, that's just the way that it is. It's the only way that I can show you how to use this anyway. Using it, showing you in real time would take me years to develop the video, and nobody wants to wait that long. So we're going to go into the past and look historically at some of this stuff. Now the other thing that I want to do is I'm used to having the stochastic on the top. So I'm going to change that, and I'll click up here to edit studies, slide this down here and say that I want the stochastic and I want to move it up. And I will say apply and OK, and now stochastic's on top of MACD. And we'll go back here and we say save the study set, Joe Blow, and then yes, I know it exists, and then we will load it over here, and we will load it. Oops. That's what happens. You squish this chart down too much. Oh yeah, let me show you. You squish this chart down too much and you don't get the menu selections up here. So what you do is you right click and you go to the symbol Apple, and then you can come down here. No, not the symbol Apple. You can go down here to studies and you can say load. I know you're just barely seeing this. Load study set Joe Blow. So that's a way to get around that. There's all sorts of different ways to do things, and the same thing in Thinkorswim. You don't always need the pretty icons up here. A lot of times you can just do, like I said, this right click, studies, and you can do all sorts of stuff. Symbol Apple, you can do all sorts of different things in it too. All right. go away now. Okay. Now, now everything looks good. Now let's go back a ways. So the first thing, when I get up in the morning, let's say that, let's go back here. This is a good example. Let's say that the day before this day, or on this day, which is 5/18, I have a stochastic that has just dipped below this 20 line, and it looks like it might be starting to want to move up, but the important thing is that it moved below it. The other thing, the MACD, which shows you momentum, is telling you that downward momentum has been relieved a little bit, because this darker red means that this value is higher. It's still below the center line, but it's higher than the previous bar. If it stays this color red, which I might call like light red, it's continuing to get larger and go further down. But here it's doing an actual reverse. And on the stochastic side of it, we've dipped below the 20, and oftentimes, I mean, just looking back here historically, especially if it's in an upward trend and it dips below the 20, this is not a good case here. You had a 1 day up day, and then you had another down, 3 downs in a row. But generally, as a rule, if the slower stochastic is dipping below the 20, or in a downtrend, if it's popping above the 80, that's a good time to consider entering. Either down here you'd be going long, or up here you'd be going short, but let me show you by example. That's probably the best way to do it. So now the next day, you have a nice big up day, and MACD has gone positive. The average for the MACD has also gone green, so that means it's positive. We have green here, we have upward movement, and we have an upward bar. Now, you're not going to know about this until that day actually ends. And you would want to go back on your, I don't think I can go back that far here to 521. I can't go back that far here. But you would want to, first we'll just do the simple stuff, the daily stuff. You would want to be ready to enter this possibly the next day. So the next day, it gaps up actually and pulls back. And that's why you don't want to get in at the open. The same mistake that I make a lot of times. I get excited. I want to enter at the open. A lot of times you may not want to do that. But if you entered today, say you entered at 560 and you did a credit spread at 560, you did an at the money credit spread, let's see what might have happened. And you want to do weeklies on these in most cases. Some of these don't, some of the ones on my A+ list don't all offer weeklies, so I don't do at the money credit spreads. I'll do, something like at a 20 delta or something like that. But in this case, I would do an at the money on a weekly, and this is Tuesday, so I would only have 3 more days left in that trade. And the next day we gap up and then drop back down. We're still pretty positive here, but the moving average, this is a disturbing thing here. The moving average, the 50 MA is curling over and we're getting a red. And that's not really good. So what I would probably do is seriously consider getting out on this day, because even though none of this stuff is final until the end of the day, these indicators move around depending on what's happening to the actual price of the stock during the day. But in this case, I would seriously be considering getting out, especially if I did a 560 credit spread and we closed at 564 here. I bet you it would have made a nice chunk of change there. And we're still above 560 even on, is this Friday? Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, this is Friday. It actually closed above 560. All right, so now we are currently in a downtrend. Now we're going to look for something that bounces above here. And on this particular day, you probably could have done one for next week, since this is Thursday. Could have done one for next week, say maybe at 564 with a bear call credit spread at the money. Would not have worked out very well, but that's okay. We can't always win them all. So now what's happening is a stock, in my mind anyway, a stock that's been in a very strong uptrend is having some consolidation happening here. Because, you know, we have moving averages starts to move down, then it moves up, then it moves down, and our stochastic is still trying to bounce up around this 80 mark, and the MACD momentum, although it started to come down a little bit here, now it's picking back up again. So now the other thing that I would have considered, well, this is advanced, so let's just stick with this. Okay, so now we're still in a downtrend. We have bounced up against here. Actually, let's go back here for our bear call. Remember, we would be considering a bear call here because it turned down. Not here, but we do need confirmation that the indicators are going down. We didn't really have a match here on 524, but on 525 we did. So now we got to wait for confirmation, and we didn't get it here. It actually opened higher and stayed higher. So now we're just wait another day and see what happens. Okay, now we're up a little bit. There's no trade here though, because I'm waiting, even though we're still in a downtrend on our 50 MA. We're still bouncing against this 80 line here. I would rather see something more stronger turning down. And still in a downtrend, but it's still, the price is still rising. All right, now we have, she is definitely turned down. We wait for confirmation for the next day to see what's going to happen. And we could enter here somewhere during this day, maybe at another 560 with a bear call. And that's a Monday. Tuesday. Wednesday it goes in the money, that's not good. Thursday it's in the money, that's good. Friday it's even deeper in the money, and that's not good. So we would have entered here. This would have been a okay day here, and we should have gotten out on the 6th, because this is we just went in the money if we're at 560, and that we don't want to be there. So that was a loser. We do have losers. We're still in a downtrend. Stochastic is back up here, and it bounced against the 80. We gap up the next day and then drop down. So we would consider sometime during the day here maybe a 575 bear call. See how that works out. For the week, on a weekly. And where did we end up? At 572. So that would have been a winning trade. That's the way I would have done it. Is when I'm trading weeklies, I try to look for, trusting my indicators, that I'm going to get a short-term movement in that direction. So if I do a 575 somewhere during this day on Monday, and it works out for me for the week. And a lot of times those are one-to-one risk to reward. And a lot of times they're about $250 for each lot, roughly. So you're not risking a whole heck of a lot. You're risking $250 to make $250, as an example. And a lot of times it works out. So if you want to trade 2 lots, that's $500. You want to trade 4 lots, that's $1,000. Risk $1,000 to make $1,000. Usually a pretty good deal in my book. All right, so the other thing that I do, and I'll probably talk a little bit more about this, because what I want to do is I want to go through some more recent ones. Something that happened in the last week, let's say. In the last week, pretty much everything has been a bummer. So I go back, my routine is Apple, and I jump over to the Apple chart and I take a look at it, and I see it's in a downtrend and it's down here at 20. So momentum is a little weak. I mean, compared to past momentum, it's a little weak. The average on this momentum is pretty deep, you know, at almost at a 9. That's pretty deep, or 9, actually it says 9.29 over here, the bubble does. But, you know, I'm not going to get in it now, even though I'm pretty sure that, you know, I think in my mind that Apple is on a big pullback. I don't know, 600 maybe is a psychological level of support here. So I'm not going to do anything. I'm going to trust my indicators to tell me what to do. We'll go to Amazon, see if there's anything going on there. Well, Amazon, it's in a downtrend, and we just had it hit the 20, and they had a big up day, probably, it looks like after their earnings. You know, I don't like to mess with earnings right now, so using this method, I mean, I use several, not several, but 2 or 3 different methods to trade, but using this particular method, I would not do this trade, mainly because we're in a downtrend. Even though it's dipped below 20 and it's way oversold, and it had a really big day on Friday. Using this method, that's really relatively meaningless. What I would be waiting for is for the moving average to turn green and to have the stochastic come up over 80, come back down below 20, and then that's a signal for me to get ready to get in. And we'll see if we can find some more examples of that. Baidu, I actually did an iron condor on this a while back. I'll get the drawings off of here so that we don't have them disturbing us. And it actually sort of worked out. I mean, it wasn't the prettiest thing in the world. I made a couple bucks off of it. But I don't know what's going on with these guys. I think they're just waiting for earnings here. So when I see earnings in the next week or so, or 2, I even on weeklies, I tend to not want to play them because you just never know what's going to happen. CF Industries, another one of my favorites. Currently in a downtrend. I'm waiting for it to get up to 80 and then hook down before I would do any sort of credit spread on this particular one. You can see that I did one back here, not using these rules because this is totally contrary to the rules. And I did one here though. Yeah, those weren't, I mean, they worked out, but they were not according to the rules that I'm explaining to you here. And when I use those rules, when I use them as at the money credit spreads, they usually work out pretty well. Chipotle. Okay, we're in a downtrend. We're looking for, this is good, I like this. Will we continue the downtrend? Well, I don't know. You know, you just never know. But we're going to see what happens when we get the hook, and we will get the hook, because it always happens. We will get the hook down. Salesforce, we just started a new downtrend here, it looks like. So I'm going to be waiting for this to get up to 80 and be overbought before I would consider a trade, as long as the 50 MA is red. Gold, I never know what to do with this thing. I have no idea. I hardly ever play gold. Too gappy, too, when I look at, the other thing that I do is I look for stocks that react well to the stochastic in particular. And, it's easy to predict where it's going to go based on the stochastic. And this one, I'm not getting, I look for stuff that goes above 80 and below 20 and, sort of has a rhythm to it. This one doesn't have it. Just have it there because you never know. All right, here's Google. You can see here in the past, here's one that got below this 45, which is if you're in a trend and you get nice flags like this. This is called a bull flag, where you have a little pullback and then it starts climbing back up again. This would be a place that I would definitely seriously consider getting into this. With a strong trend like that, I would definitely look at an at-the-money credit spread for that one. But now we got, okay, what's going on here? We have earnings and goofy things are happening. We'll just have to wait till it settles out and gets back into, a nice rhythm for us here. Because here actually, it gets down to the 20 line almost. Looks like it kind of lands on it, but gets close enough. And the next day, it gives us an actual signal to get in. It would be on this day. And if you did one at the money, it for Friday, for the next Friday, by the time you got over here, and I don't stay in them very long, I have a goal, and I'm out of them, especially with earnings coming. I would not have played this anyway with earnings coming up in 2 weeks. Thanks for telling me that. I'm sure I heard somebody out there say that. MasterCard, I'm going to skip IWM. MasterCard is another one. Here we were in an uptrend. This is a play that I did. This was not an at the money. This was one that was probably had a 25 or 30 delta, somewhere around there. This was a 440 bull put credit spread on this particular day after it turned up, and we got we went positive on the MACD, and I jumped in and I was sweating. And this was actually a long one. This is 1, 2, 3, 4 weeks. It's a regular monthly expiration. And that's why I picked the delta of a 20 and stuck through it and made max profit on this. But actually, I'd have to check, but I probably entered a day or close to a day or two before the actual expiration. I did a couple back here too. You can see on the weekly chart. Let's go back here and take a look at them. All right, I entered on this day, a weekly, and I sweated it out, but you can see that I saw that it was coming down here. I was a little bit early on it. Would have been better if I would have entered here. I could have done one at the money, but I want to play this one a little bit safe. So I gave it a cushion, and that one worked out. And it looks like there should be another one back here someplace. When was this? 8-6. That's the one we just looked at. Then there's this one, right? Yeah, okay. So this one was near the money, and this one worked out also. This was a weekly, and that one worked out using that criteria. The moving average moved down, so that was a no-no, but I got in it anyway. Sometimes I violate my own rules. But it was pretty flat. I wasn't real worried about it. The 15 EMA that's in here, they kind of use it, acts as support and resistance a lot of times. I don't look at that a whole heck of a lot. I probably should look at it more, but I don't. Price line. All right, we have it's been moving down for quite a while. Back here I did a regular monthly expiration, which is, let me squish this down here. I got in it on this day. I was a couple days late because we were in a downtrend. It had, Stochastic did move down, hooked down, and I was really late in getting into this one. Gave myself a nice big cushion, and it was successful. Price line has not been too good to me. And you can see here that it was not too good to me here either. I think I lost some money on that one because I just stayed in it too dang long. But I did have some support and resistance identified here. Look at that, boing, 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 right here at 560 or so. It's something to keep in mind. I should probably extend this out because it looks like we came down and we hit it again. So I'm going to edit the properties on this drawing, and I'm going to say give it a right ray. Right ray. And, well, lo and behold, there is some serious support there, isn't there, ladies and gentlemen? Here it was resistance. Boing, 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 boing. Smash through, come back down, test, test. I think my wife is home. My biological doorbell is working just great. I'm going to pause until she settles down. Well, I guess she's good now. She's only growling. Let's see here. Okay, now go back to the watch list. Panera Bread is the last one that we're going to look at. And I squished this down now, so now it's automatically set to show me this price range. And if I want to fix that, I just go back here and say auto scale. And we'll come back to Panera Bread. They had their earnings. Just wait a week or so until things settle down, until we can determine what it's going to do. And that's a good question in today's market. What is it going to do? Do not assume that because the market's down that these stocks are going to be down also. Some of them move contrary to the market, either daily or weekly or monthly. So keep that in mind. We're at 30 minutes. I'm going to probably do another recording or two. I don't think I got everything across. I didn't make notes on how I wanted to logically lay this out for you. I think that watching what I look at is probably more helpful. Maybe I'll just do a series of morning scans and just cram them all together and let you know what I did. That's probably like one of the best things to do, I think. So we'll do it that way. That's the way I'm going to do this. All right, so I think I'm going to at least put these out there for you to get some interest going. And starting this week, tomorrow, I'll start recording in the morning, telling you what I'm doing. And then the next day, when I do the recording, I'll let you know what I did the day before, if I did anything at all. So thanks for watching. Sorry if this is confusing, but I think that as we go through this a little bit more, it'll become more clear to you. And I'm not a teacher, so I didn't do an outline, so I did the best I could. But repetition is the best way, and it's always been that way for me. And they call it muscle memory, I believe, is a term that they use for it. So we'll get some brain memory here in going through these and looking at these charts. And this will also help me to become a little bit more disciplined in the way that I'm doing this. So I think it's going to be good for all of us. All right, again, thanks for watching and happy trading.